Hi, dreamers. I know some of you are like, Dream, you're really cool and all, but $250,000 just in JEPQ? Are you sure? I mean, that's a lot of money to put in one fund. How are you so confident in JEPQ? So today I thought I'd look at how safe JEPQ is and dig just a little deeper into the ELNs themselves. How risky is JEPQ? So if you go to JP Morgan's main site on JEPQ and you start to scroll down, you can see the top 10 holdings here, and they make a lot of sense. Apple, Microsoft, Nvidia, Amazon, Google, Meta, Avgo, Tesla. But wait a minute, record scratch. What is this NDX10, NDX14? And if you click on this download all holdings, you get to a spreadsheet like this, which starts to show those top holdings, and then a bunch of these NDX things with numbers against them. And they say that they are equity-linked notes. And there's a couple more down here. But if you take a look at this, there's really not that much information to be had, besides the size of the position invested. So we know ELNs are a big part of JEPQ and JEPE's strategy. So let's just start with, what is an ELN? And as you can see here, an equity-linked note, or ELN, is an investment product that combines a fixed income investment with additional potential returns that are tied to the performance of equities. Equity-linked notes are usually structured to return the initial investment with a variable interest portion that depends on the performance of the linked equity. And specifically, the linked equity can be the S&P 500, the Dow Jones, or, in JEPQ's case, the NASDAQ. So with that, I point us to another article. What exactly should we know about ELNs in a banking crisis? And this was dated in 2023, when there was a problem with Credit Suisse that made everybody worried about it. And I found the bottom of this article particularly helpful. And it's really about understanding, not just with JEPQ, but with any product that you are invested in. Really understanding your exposure and how it's limited by regulatory design. Because due to a Securities and Exchange Commission rule, there's a cap of a single issuer risk to 5% of ETF portfolios. And so with JEPI and JEPQ, they cannot exceed 5% exposure to any particular bank. And in the case of JEPI and JEPQ, they further cap their ELN total weightings at 20%. A second limitation to the risk is how long is the term, or how long until the ELNs in the portfolio hit maturity. And here they talk about, you could argue that in the case of a market event such as a banking crisis, the shorter term the ELN is, the more easily it can be unwound early. And so if you click on this fact sheet here, it takes you to this page, which if you scroll down just a little bit, talks about the fact that they use 1 month out of the money call options that are designed to generate income and give investors a portion of the upside with reduced volatility. You know, I also went to Morningstar now that they have a good 2 years of data on JEPQ. And one of the things stated from one of their analysts is that the use of ELNs does invite that counterparty risk of essentially the potential of a bank failing, but that JEPQ often invests around 15% of its assets in the ELNs, which is below the 20% regulatory cap, and spreads their ELNs across 4 to 5 issuers to stay under that 5% issuer cap level. They further talk about that the management team is only allowed to transact with large global financial institutions, typically global systematic important banks, or otherwise known as GSIBs, and that they purchase ELNs from issuers offering the best income through a competitive auction process, which should tame the commission spread. And so if you take a look at the FSB, you can actually see the list of GSIBs, which include JP Morgan Chase, Bank of America, Citigroup, HSBC, and some of the other ones listed here. So it's a pretty short list of banks worldwide, and they're actually categorized by how much they have to hold in capital in accordance to international standards. And you can see that here. And so who are the banks that JEPQ is using for their ELNs so that you can monitor the creditworthiness of those banks? Well, one place you can turn to is Seeking Alpha. And so, for example, in a recent article here, if you scroll down, you can see a listing of the current holdings of JEPQ, the fact that JEPQ currently holds 11 ELNs, or 15% of the total portfolio weight, but then further also, exactly which banks they partnered with at the end of March, which was BNP Paribas, Goldman Sachs, Mizuho, Morgan Stanley, National Bank of Canada, the Royal Bank of Canada, and Societe Generale. And one more place you can find this is if you go back to JP Morgan's website and you scroll down and see this little documents area here. If you click on it and you scroll down to the semi-annual report to shareholders and you click on it, this is where you can select the quarter 3 holdings. And here's that list, which you can check back in the different quarters as they update this regularly. So what's my conclusion in all of this? Listen, investing in the stock market at all is a risky endeavor. And for that risk, you get a return. It's really all about calculating your risk and really understanding what's held inside of the funds, or in the case of an individual stock, what the company itself is doing in order to give you a return on the risk that you're taking. In my opinion, JEPQ has had a competitive total return with a pretty steady income payout, and I've been pleased with its performance. I understand their ELN strategy and feel comfortable because I know I have the JP Morgan asset team paying attention to this every single day. They're allocating around 15% of the funds to this, which is under the 20% regulatory cap. I know the regulations cap them to a max of 5% per issuer, and that those issuers must be GSIBs that also have a significant financial and capital buffer, in addition to the length of term being relatively short, with those 1 month out-of-the-money call options. And so, those are some of the reasons why I have a relatively good level of comfort around the risk for JEPQ. And the last thing I would leave you with is, if any of these banks went under in a global banking crisis, I actually think we'd have a lot more to worry about than just our JEPQ investments. But what do you think? Do you think the risk is worth the reward? Let me know in the comments. Well, that's it for today. I hope you enjoyed this dividend income update. And if you want a richer, real-time experience with me, you can always follow me on Instagram or X. And if you're doing your own research using Seeking Alpha, feel free to find the link below to subscribe if you want, no pressure. As always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.